This is Simon with AvaTrade. Welcome to our weekly webinar, Mapping Out Your Week Ahead. And for new people, of course, there's special welcoming going out there. And just to explain the titles, what we're doing here simply is trying to create a plan for the week. And as I like to quote the traders all the time when they say you plan your trade and then you trade your plan. So of course, there's no guarantee in succeeding, but definitely not just in trading, but anything that we do in life. When we spend a little bit of a time of kind of organizing our thoughts and creating a plan and structure for our future actions, it creates a better process, less impulsive, less chaotic, and probably a better outcome. Few things about myself. My name is Simon Friedman. I'm a senior account manager with AvaTrade. I've been involved in trading for over 25 years. I started as a prop trader on Wall Street in June of 2000. And after 11 years of doing prop trading, I left to, as I like to say, less stressful environment. And I also at that time started to mentor and educate others. And I'm very happy I have this great opportunity to be assisting our customers at AvaTrade. So what we do here, the same thing we do every Sunday. We'll talk about indices, stocks, commodities, and Forex, and a little bit of crypto for dessert. We'll take a look at some fundamentals, what happened last week and what's awaiting for us for this upcoming week. We'll take a look at economic calendar and I will explain what it is. This week we have a lot of events. I had the hard time fitting it into one page. And then we'll move to the charts. We'll take a look from the technical angle at the instruments. We'll also take a look at winners and losers for the past week, and we'll also watch them on chart, try to see what's happening. Risk warning, you can find our full statement at avatrade.com website. Of course, everything we do here is purely educational. We do not suggest any trades, and of course, we do not give any signals here, just purely educational process. Social media, please feel free to follow us on Telegram, X, and YouTube. As I usually say, YouTube is my favorite because it's being filled with information daily. You have tutorials, you have educational materials, you have webinars, including this one. So if you miss the webinar or you're worried about missing it, don't worry. All the webinars are being recorded, posted on YouTube, and you can find your time whenever it's convenient to go through them. If you are watching this on YouTube, of course, don't forget to click the likes, only if you like it, of course. Share it with people that might benefit from this, and write your feedback, questions if you have anything. All right, so before we go to the slides that I usually prepare, we had CPI data, PPI first, and then we had CPI on Thursday. Market was very positive about it. We had a little bit of uptake, but as expected. So as of now, it's a high probability of the Feds cutting the rates this upcoming week. The meeting starts on Tuesday, Wednesday. There's a decision coming up. So we had markets, equity markets making highs. Friday, we ended up with NASDAQ making all-time high. S&Ps were a little bit maybe flat, and Dow Jones sold due to some healthcare stocks. We'll take a look at the indices when we get to the charts. So let's go through the things that I prepared here. I have 4 slides with parts of an article. This is from marketwatch.com and Barron's as well. So It's an interesting title here. The world's a mess. Markets are ignoring those risks for now. And whoever wrote this article, pretty much creative here. Walter's obvious optimist fits in well in a place where domestic political violence and escalating global tensions don't intrude. And so major equity indices notch record again in a week marked by abhorrent assassination of in the US, while Russia sent drones supposedly intended for Ukraine into Poland, and Israel expands the Gaza war in Qatar. As Peter Atwater observed in his financial massive this past week, it isn't, sorry, my reading in the morning is not so great. It isn't known if Chinese President Xi Jinping might tag along with an assault on Taiwan, or India Prime Minister Narendra Modi could up the ante with Pakistan, but global markets have priced in none of these. So, I mean, this is the beginning and this is the end, so we can just skip the middle. The world is a mess. Markets are ignoring those risks for now, and nothing's priced in. I mean, well, it's true. We are living in a lot of chaos, unfortunately, and things don't look that bright yet. Nevertheless, the markets are just ignoring and moving higher. That brings us to a second title here. Stock market's relentless rally threatens to turn into melt up. What's next? And it says right here, the S&P's 500 is trading around 10% above the 200-day moving average, noted Adam Thornquist, Chief Technical Strategist for LPL Financial. Few individual shares in the index are significantly overbought, but it's a development to watch, while overall conditions suggest the market may be moving more toward melt-up mode, he said in an interview. Interesting. And then brings us to gold, which clearly playing as a safe haven. And the next two titles here about the gold. So this one said gold keeps hitting record after record. Is it time to think about selling? And it says right here, where an investment does as well as or better than you hoped it would, what do you do next? That's the dilemma for gold investors who have seen prices for the precious metal settle at the record high more than 30 times so far this year. Don't be scared by recent big move higher, said Chris Moncini, co-portfolio manager at the Gabali Gold Fund at Gabali Funds. We don't think you've missed it, he said, referring to opportunity in gold. It still makes sense to own gold. And here's another one. This is from Barron's, I think. Gold rally has more room to run, the strategists say. September 12, while the price of gold is now up by close to 40% so far this year, making it the best performing major asset class, we think the metal has further room to rally. We expect bullion to reach 3,900 an ounce by June of 2026, up from our previous forecast of 3,700. Interesting. UBS that expects. So one side we have chaos, the market ignoring it, potentially coming to meltdown. The other side we have gold that has more potential upside. All right, Feds. This is the CME Fed Watch percentage here. As of now, it's 93.4% probability of 0.25% cut, and 6.6% actually of 0.5% cut. Big week, big decisions. All right, that brings us to economic calendar. So I'll explain what it is first, and then we'll go through it. So for those of you who are not familiar with it, it's public information. You can access it on WebTrader or the app. It's also available everywhere. Just Google it if you'd like. You can filter through it and see what's relevant for your trading. What I do here, usually I take the high impact events only. There's so much more there. That's why I say you can take a look what's relevant to your trading. So this is the week that we are facing. We have few interest rate decisions. We have other events. So we just zoom in so we could see a little bit better. Like I said, I had a hard time fitting it in one page. So we're starting with China on Monday, industrial production, retail sales, and a president of European Central Bank speaking. That's on Monday. Tuesday, employment data from UK, CPI data, inflation data from Canada, and retail sales from US. As you could see, the consensus for retail sales is lower than the previous one. That brings us to Wednesday. So the meeting with Fed starts on Tuesday, but Wednesday is the announcement. So Wednesday is a super busy day. We have CPI numbers from UK. We have another speech of President of ECB on Wednesday. We have interest rate decision first from Canada, followed by statement and press conference. And then, by the way, here I choose the GMT time just for general information. You can choose whatever time fits you. This is all GMT. So interest rate decision comes at 6 p.m. GMT. So you could see here the expectation is a 0.25% cut. We have statement details, and then 30 minutes later, as usual, we have FOMC press conference, and that's where I like to say the Chair Powell is being drilled by all kind of questions. Some of them are very provocative. So, I mean, we're not going to predict anything or kind of see what move the traders should take. We'll see the initial reaction to the market, and then we're going to have a break of 30 minutes. And then when press conference starts, each word is being really, really watched, and each body move is being watched by everybody. So we have a lot of volatility during the press conference as well. So we'll take a look at that. Now, New Zealand reports GDP numbers. That's also on Wednesday. Going into Thursday, we have employment data from Australia. We have another speech by President Lagarde, the president of ECB. And then we have Bank of England minutes for their last meeting, explaining their decision and thoughts process. Friday, we have another important interest rate decision from Japan. And of course, we'll be watching here, and we'll be watching the Nikkei. Nikkei has been super strong. We'll take a look when we get there. And we have the retail sales from Great Britain, from UK. All right, so as you could see, it's a huge week. Announcement, definitely will have volatility, definitely will have moves. The US equity markets are on the highs. Question is, will we break? Will we melt down like some of the analysts are sharing with us their thoughts here? We'll see. We'll see what happens. So that's economic calendar. Now, moving to winners and losers. Usually I just show futures here. This time I included the stocks because I didn't really have big losers for the past week. So I included the big losers in stocks here. So it's a mixture of futures and stocks. And later, of course, we'll take a look at the charts of this instrument. So palladium was up 873, coffee up 632, silver up 271, corn up 239, copper was up 213, soybeans 178, sugar was up 167, and crude oil up 1.18%. To the downside, we had a sell-off in natural gas down 305, and these three stocks were losers. Now, Oracle, it's obvious we had a huge run on Oracle since the last earnings, and normal profit taking, maybe Pfizer was down almost 4%. I'll explain why when we get there. And Intel was down to 15. All right, so let's move to the charts now. And we'll start with indices as usual, starting with China. China, as we said last week, it was building the new channel here after this huge channel for a very long time. Thursday, we broke through it. Now we're coming to retest it. So should we hold this level above 15,000 and build some support, we could be seeing a further upside move. So you could see on the monthly chart, it looks very nice here. It has a potential to move higher. Let's see how things play. Now, as I mentioned to you, Nikkei has been super, super strong. Let's see how this Friday's decision from Bank of Japan will affect it. As you could see here, we're clearly having a strong move to the upside in Nikkei. We're forming a new trend line here, just super strong. We keep on making higher highs, higher lows. We are looking very strong here. So let's see if this move continues. Let's try to maybe draw the upper trend line. It looks like clearly we're trading in the channel here, the ascending channel. Let's see how things plays out. Now, as we said, Friday we had flat S&Ps, a strong Nasdaq, and a losing Dow Jones. So let's take a quick look how things are looking here. We are trading at the all-time highs on S&Ps, as you could see clearly. Friday, it looks like a little flat here. We had an opening at 65.92.5, close 65.44, 4 points lower. Nasdaq had a nice run to the upside, mostly due to Tesla moving. Tesla moved on Thursday and Friday. Big moves, and they are expecting benefits from a potential rate cuts. As you know, most of the new cars are being financed, maybe used cars as well, but the new cars usually getting financed. So lower interest rate is more attractive for the buyers. So we had when we get to Tesla, I'll show it to you the price action on that. But Nasdaq moved strongly due to Tesla's move, and Dow Jones had a losing day. Let's remove this due to the healthcare mostly, and still at the all-time highs. But we erased on Friday half of the Thursday's move here. Let's take a look at Germany. Germany is sitting on this trend line that was set up a while ago. We are below 150-day moving averages here. Let's see how things play. We have, as we mentioned, 3 speeches of President Lagarde. We have some data coming out. UK index, it's held at the previous support here. We had all-time high marked on August 22nd. So let's see what's here. This week we tried to run, but we couldn't. And if we break the previous support here, we could be marking the lower high followed by the lower low, and that could be potentially a change of trend. All right, so that's as far as indices. Now going to individual stocks, to equities. Here's Tesla. We had a big move on Thursday after CPI numbers. We broke through the previous resistance here from end of May, and Friday on the high volume, we continued that run. So it was a super strong move. 2 days, we closed at 395.20. Of course, the obvious question, will we reach that psychological level of 400? That would also be closing the gap here from January 31st. It looks good. Clearly, we had a lot of accumulation here. We broke through, as we said, the resistance of end of May. And let's see how things play for Tesla. Now, as we said, there were issues with healthcare. Pfizer dropped 3.9% here, and the main reason is the Trump administration is actually trying to link the death of 25 children to COVID-19 shots. Reaction was strong here. Moderna also fell 7.4%. Let's take a quick look. We could be approaching that trend line here. So, as we said, that affected also Dow Jones. And let's take a look how this issue. As we know, the health secretary, I think Kennedy, he's against the vaccination. There's a big issue there, and they're pushing against the vaccination, and that has been affecting the healthcare and the companies that are developing and selling those vaccines, of course, are being affected. All right, banks. You know what? Before we go to banks, let's take a quick look at NVIDIA. As we know, NVIDIA has been pushing the markets. It's the strongest involved with AI technology. And as you could see here, we just made two lower lows. It looks very interesting. As we said, I think last week, there's a big concern about a possible bubble of AIs. So there was a reaction here, but then we came right back here. But so far, we are hesitating to confirm that high again. We are trading about the 50-day moving average. We're far from 200-day moving average here. By the way, you know what? Let's take a quick look at, let's finish with the NVIDIA. So let's see how this week plays. And in general, we're going to have definitely some serious moves on the market with that Fed's decision followed by press conference. Let's take a quick look, just trigger the thought that I mentioned earlier that S&Ps are trading 10% higher above the 200 moving average here. Is that so? Yeah, it looks like it. So that's what the analysts are concerned about. All right, so that's NVIDIA. Going to banks. Banks are holding stronger. It was a nice move to the upside after the reassurance in a way that the Fed will cut the rates. JP Morgan is making the highs here after a correction. Goldman Sachs, the same thing. Bank of America confirming or trying to break through the highs. Citigroup, all-time highs. So the banks are moving strong here. Let's see, again, I keep on saying, let's see. It's true, let's see how this week will play with the Fed's decision. Now, let's take a quick look at the big players here. Netflix is trading lower for the 3 sessions here, just broke below 50 and 100-day moving average here. Apple initial reaction as usual, as I mentioned to you last week, usually after that conference September when they reveal their products, the initial reaction is down, but then take a look, as Nasdaq was going lower, oh actually no, sorry, I take it back, Nasdaq didn't go lower, it was going higher, but Dow Jones. So 2 consecutive days to the upside, closing the gap, and this is the gap after the conference. So let's see, the pre-orders of new iPhone 17 started on the 12th, 2 days ago. We're going to start hearing probably first opinions and feedback from consumers on a new phone. Let's see what Apple does later on. Amazon sitting on 50-day moving average here. Microsoft continues to be weak. We cannot break the 50-day moving average here after the recent sell-off. Google is a champion, but as you could see, it's rounding up a little bit over here with the tails. Also, it could be that upside move is getting a little bit exhausted. We might see some profit taking also with too far. Again, I'm afraid to say too far. Let's just say far from 50-day moving average, from 200-day moving average, also from 50 at the all-time highs. Let's see, with these tails, gives a clue to traders possible profit taking coming up. Meta, on Meta, we made lower highs, lower lows, which were erased here. So we're back to uptrend above 50-day moving average here. Tesla we spoke about. It's a strong move to the upside. All right, that's it pretty much with individual stocks. We'll take a look how this active week will turn out for the stocks. Going to, you know what? Let's take a quick look at the stocks, Intel and Pfizer, right? We said that Pfizer went down on that concern with the vaccine. We saw the Pfizer, but Intel we missed. Intel, where are you hiding? Here we go. Intel had, just to remind us, the government got involved. They're buying or bought already 10% of the company. We had a nice move to the upside here from below 20 to about 25. And now, excuse me, we are coming to test the 24 level. That was the initial resistance here. Thursday and Friday, the stock sold. All right, going to commodities, we'll start with palladium. It's a big gainer here, even though Friday we erased the whole potential profit here, but for the week we still had a nice run in palladium to the upside. There was a lot of accumulation here, as we said, around 1104. We didn't break it, we tried, and then the last attempt to break here was on the 5th of September. Since then, we had a vertical here, move to the upside, very strong move. So up 873 for the week. Coffee, as we said here, if you remember, we've been talking about the Brazil potential effect of tariffs. It was a lot of actions here before we made that a strong move, and then after making a move, there was a consolidation here, setting up for the next move to the upside. And Friday was a strong move. So for the week, it looks also a strong move to the upside. Coffee was up 6.32% for the week. We could be on the way to retest these highs here from April 29. The high here was 418.75. Potential move could be continuing to there. Next one is silver, up 271, steadily moving higher here in parallel to gold as well. As we said, gold is continuing safe haven mission. Silver is going up with it as well. Next one is corn, up 239, breaking through 100-day moving average here, continuing. If you take a weekly chart, we had a double bottom here. That was August 24, followed by August 25. Took a year to come right back, and now it looked like we potentially could be moving higher from here after developing or establishing the double bottom here. Copper, with the China move, we had a move on copper. If you remember, we set up this Fibonacci retracement for the whole move when Trump announced that tariffs will only affect the copper products, not the raw copper. And there was a huge drop since then. Excuse me. We've been trying to climb. Now we just reached the 23% retracement. Let's see if we manage to move higher. What discouraging here, as you could see, the 50-day moving average is catching up with 200, which could translate into the dead cross, something that analysts considering as selling signal, similar to what we had here, the golden cross, the opposite. That's where the buyers look to buy. So let's see if that will push copper lower, or we just ignore that aspect and try to move higher from here. Soybeans, similar to corn, we had a nice move after holding the 200-day moving average. We had 2 sessions to the upside. Same thing. So you could see there was a lot of accumulation here, channeling for a long time, pretty much for a year. A lot of accumulation. Let's see, it could be that will start moving high here as we established on a weekly chart above the 50-week price action here. And sugar, it comes with coffee, also had an up week, up 167. Not that significant, but we are establishing here the double bottom, it looks like it. All right, and the last one is crude oil, of course. Was up 1.18% for the week. Friday, we actually initially erased the losses from Thursday, but then we came in again. So we ended up green, but gave away the upside move significantly. So crude oil so far, and the big picture, we are holding here around 61.5. We did try to run, then we faced a strong resistance here around 50 and 100-day moving averages cross, and then we came right back down. So I guess as of now, the 61.5 is our support, and 66 it's our initial or immediate resistance. So we have a new form channel here for $1.50 between 61.5 and 60. Why am I saying it's $1.50? It's $4.50, sorry. Between 61.5 and 66, a clear channel is being forming here. All right, so that wraps up the commodities. So let's go to the Forex. Of course, big week, the decisions from Canada, US, and Japan on interest rate. As you could see, dollars really pushing lower here. We're clearly forming a trend line here going down, and keep making lower highs and holding that price, not breaking. So I guess they're holding that dessert for the interest rate decision. Potentially, we could have the breakthrough to the downside, or maybe to the upside, right? Some look at it as a wedge that could be broken to the upside. I mean, as I always say, if you look at the chart, it's hard to be objective. You always find something that you're looking for. So that's why predicting the move sometimes is dangerous, and having a strong conviction, it's even more dangerous. So we'll find out. As of now, what we see is lower highs and a strong support around 97.40s here. The opposite, or the mirror image on euro dollar, we have a strong support here and looking to move higher. Pound is trying to move higher here. Australian and New Zealand dollar, they moved nicely, especially the Australian dollar, the nice move on this past week. China moving higher helps it as well. New Zealand dollar is trying as well. Dollar Swiss, it's remaining weak below the 50-day moving average. USD CAD, it's been stronger because of the weak oil affecting the Canadian dollar. And of course, dollar yen, could see a lot of actions here. We are having the double impact this coming week. We have an interest rate decision from both Japan and USA. So as you could see here, when I draw the top of that channel, we have a clear accumulation here. We just try to zoom out and see which way we could potentially go here. So trying to go back, we came from April here, from our lows, which was higher than the previous one. And then we had some price action facing higher, having a high on July 31st. Then the very next day, we erased that advanced move from that day and another 3-4 days. And since then, we've been trading in a tight channel here. Also, we have a golden cross here, 50 above 200, which gives us another positive hope here. Nevertheless, we are trading within this range here, 146.5 to 149. And of course, the big resistance would be around here, which correlates with this one here from March, around 150, 151, right? So a lot of accumulation. That means that the spring is ready to jump. Question is which way. All right, that's as far as FX, and as we promised for dessert, we'll take a look at cryptos. Bitcoin looking good here. We did break recently through the double bottom here, but recovered very nicely. We are trading to the upside. Next checkpoint probably is going to be here, 117.373. And Ripple had a nice move over the weekend, and today we are taking a little bit of profit. We are a little bit red here, but we are looking good. We broke through this downtrend nicely. And on Ripple, it's very interesting. Tomorrow was supposed to be a deadline for the ETF being approved by SEC, but they extended it, I think, to late October or November. I'm not sure about the dates. So we still need to wait for that, because the excitement came partially because of that. The ETF is a big thing. The moment the ETF is being created, that means a lot of physical Ripple will be bought, and that will affect the market price. But it didn't happen, so maybe this is a reaction, but it looks very good here, very strong. A lot of social media talking about XRP going through the skies, so it looks pretty good here. All right, so that's it pretty much about the technicals. Again, we have a few important events, a lot of them. Of course, the highlight is the FOMC decision followed by the conference. We have another decision from Canada and one from Japan on interest rates. We have a lot of events. I'm not going to go through them again. Busy week. Enjoy the weekend, get some energy, prepare yourself mentally and physically for the upcoming week. And of course, I want to wish everyone a successful week, and have a plan, control your risks, and have a successful and blessed week. All the best. Take care.